Hello, everyone. My name is Risa Sasso. I'm the Homeownership Coordinator 3 at the Virgin Islands Housing Finance Authority. I also have today with me Ms. Tanya Industria. She's also a Homeownership Coordinator 2. June is Housing Month. Thank you for attending our online webinar on budgeting, your financial roadmap. This is our second webinar of 4 webinar series. In this session, I will go over some key tips on budgeting. I'm trying to change the slide. Let me go ahead. I don't know why it's not going through.
There's only 3 people on this call? Can't be.
Should I go ahead? Okay, what is a budget? A budget is a financial plan that allocates future personal income towards expenses, savings, debt, and repayment. Past spending and personal debts are considered when creating a budget. Why budget? Most Americans don't have a budget, but most millionaires do. You would think that since they are so rich, they won't have a budget, right? The wealthy knows that the best way to grow your money is to ensure that you are spending it on what you really need and not wasting it on what you want. Therefore, you live within your income limits, reduce your debts, save for the things that you want, such as going on trips and having control over your money. You would ask, does budgeting make sense? A budget helps you track your spending and keep you out of debt. By budgeting, you can see whether you are spending too much money in a particular category or just adjust as needed. You need to hold yourself accountable, make it habitual. Let's talk about budgeting. So before you budget, communicate with your family members about your finances, which means keeping everyone in the loop. Consider your personal and family situation. No 2 families are alike in lifestyles, income, and history. Set your goals, then determine how much your goal will cost when you want to achieve your goal. Individual will have short-term, intermediate goals, and long-term goals. A short-term goals is things that you would want to achieve within the next 6 months. Intermediate goals are things you would want to achieve within the next 1 to 5 years. And long-term goals are things that you'd want to achieve within the next 5 years and beyond. Here are some examples of a short-term goal. You want to go on, your goal is actually a vacation. You want to go on a vacation in the next 6 months. You will need approximately $1,000 to go on that vacation. Therefore, you will need to save $166 in 6 months to be able to achieve that goal. My next goal is to buy a car. You actually want to buy a car for your son who's going to college in the next 12 months. You will need approximately $2,500 to purchase that car. Again, you will need to save at least $208 in the next 12 months to be able to achieve that goal. There we have an intermediate goal. Here's another example. Your son is going to college in the next 2 years and you don't want any additional student loans. So therefore, you will need to save up at least $8,000 for your son's tuition. Again, you will need to save at least $333 in the next 2 years to be able to obtain that goal. Next is a down payment. You are ready to purchase your dream home in the next 5 years. You're waiting and you want to make sure that you have enough money for the down payment or closing costs. So you'll need to save at least $7,500. Again, You will need to save at least $125 in the next 5 years in order to achieve that goal. Do we have any questions so far?
No, ma'am.
All righty. Steps to your financial balance. Know your income. Take home pay, which is called your net. Know your monthly expenses, such as rent, groceries, telephone, utilities. Know how much you owe. Know how much you owe on your credit cards, personal loans, student loans, and car loan. You need to know your balances so that you could actually balance for those. Keep your checkbook in balance. These are actually steps to developing a household budget. There are three parts to a budget: income, expenses, and debt. First, you have your income, which is your net, which is your take-home pay. You have interest and you have bonuses and commission. Next, you have your expenses, such as your fixed, which actually stay the same, which is your cable, your rent, your childcare, Hulu, Netflix, cell phone, all of those are actually fixed expenses. You have periodic expenses such as birthday gifts. We don't put that into consideration, but yes, birthday gifts, car repairs, car registration, travel, wedding gifts. We're going to a wedding. We need to purchase a gift for the bride and groom. We need to also put that into our budget. Variable, we have such as gas, groceries, and entertainment. Next, you have your debts, such as loans, student loans, mortgage loans, auto loans, and personal loans. And then you have your credit cards, such as your Visa, your MasterCard, your American Express, Discover, and Store cards. These are all part of making up your budget. Checkbook and ATM balancing is very, very important. So you sort your canceled checks. Check to see if they are all cleared. Many banks have moved to digital banking for canceled checks as well. So, sometimes they will send it to you automatically through your online checking account and so forth. Sort ATM withdrawal slips. Compare your canceled checks and ATM withdrawal slips to your register. Don't throw away your slips. Gather until at the end of the month to log it. And look for bank fees and what they cost. Compare deposit records and bank statements. Look for interest paid on your account. Sometimes they are monthly or quarterly. Check statements against register and calculate all transactions. And verify your balances match. There are 3 steps in setting up your budget. First, you have setting up your budget. Second, track spending. Third, adjusting your budget. First tip, setting up your budget. First, you're going to determine your categories of spending, such as savings. Pay yourself first. Keep saving as an expense. Housing, you're going to pay your rent or your mortgage. Utilities such as gas, light, water. Then you're going to go on to your groceries. Try to go grocery shopping every 2 weeks, not weekly or not daily. Transportation, gas for your car, tolls for the train if you live in the States, bus fees, and car maintenance. Medical, such as medication, doctor's visits, medical expenses. Also your debt and also personal expenses. How do you create a budget spending limit? Record spending habits for a month and use as a guideline. Also, you guesstimate your expenses based on how much you spend. Track your spending, which is number 2. Different ways to budget. Envelope budgeting. I remember my grandmother doing this back in the day. She would keep all her receipts in an envelope until the end of the month. And then she would go through them and check them off and make sure that everything is logged. Reverse budgeting, which you're going to actually pay yourself first. Track to the penny, which means if an item costs $5.98, you will log $5.98. Tracking to the dollar. If an item costs $5.98, you will log $6. You would actually round it up to the next dollar. Why keep records? Records are valuable. You will need to maintain control over your expenses. Records can help you pinpoint trouble spots before they occur, such as you realize you spent $80 for gas instead of spending $50 you budgeted for the month, which means you actually went over. So you want to make sure that you log it so that next time or the following month, you know that you'll probably put down $80 for gas instead of putting on the $50. Records help you make decisions and plan future spending. Shown here is an example of a budget. So we'll go into this budget and I'll explain briefly how the budget works. So on the left side, you have my income, such as my wages, which is $1,000, and also child support that I received for $300, which gave me a total income of $1,300 in my for total income. On the right side, I have all my expenses, such as my rent, which is $500, my loan payment, which is $50, daycare for my kid, which is $250 monthly. And then I have my flexible expenses, such as my savings, $25, telephone, $25, food, I spend $250, transportation, $50, and personal expenses, $50, which give me a total amount of $1,200 in expenses. So therefore, I have a surplus of $100. What do I do with my surplus of $100? I can either pay down on a debt or I can either put it into savings. Then I actually compare month to month to make sure that I am actually keeping to my budget every month. Other tools that you can use to track your expenses are Microsoft Excel tracking, apps on your phone such as Clarity Money, Mint, Pocket Guard. There are other links that you can use, and they're actually linked to your account. Any questions, Tanya, so far?
No, ma'am.
All righty, adjusting my budget, which is number 3. If you need to cut back on expenses, start first with flexible expenses such as dining out and entertainment. You can actually go to do free activities such as jazz in the park. Before COVID, we had jazz in the park, and also you can actually take your kids to like Home Depot where they have like the kids corner. All of these are free activities that you can make use of. If you have a surplus after subtracting expenses, consider adding more to your goal-related savings. Each month, you should adjust your budget as needed and account for changes. It may take several months to adjust before your budget. It may take several months to adjust in your budget before your budget works smoothly. The key is to don't give up. Try budgeting for at least a year. I actually have clients who have been budgeting for more than 2 years, and they enjoy budgeting. So it is something that can be enjoyable. It can actually work for you. So basically just don't give up, continue doing your budgeting. Budget tips to consider. Keep your budget simple. Don't make it complicated that it's hard to follow. Be realistic about all expenses. Keep trying until you find a system that works for you. Provide personal allowances for everyone in the household. Include mad money for adults and allowances for children. Provide, distinguish between wants, which is probably buying a shoe, and need, which is paying for medication. Borrow with care, which means don't go out borrowing like crazy, such as applying for all stock store cards. Plan and develop an emergency fund. Make sure you have money for unexpected expenses such as car maintenance, car registration, yearly eye examination, and if you have a broken television. What is saving and investment? Saving and investment, use your money to create more money for you. invest in 401k or IRAs, invest in the stock market, open highly yield savings account. The money you save can work for you by earning interest and bank and other financial institutions. When choosing an account, you will keep in mind the interest rate. Choose a rate of 1% or higher, savings accounts and CDs. Fees, charges, and penalty. Avoid accounts that with monthly maintenance fees such as small ATM fees. Balance requirement. Many checking accounts require you to maintain a certain balance to avoid fees. Balance calculation is how you receive your interest, monthly or quarterly. Make sure your account is accessible to you. When it comes to managing your money, you want something that is easy for you and accessible. Alrighty, so we have different type of savings account. So unless you win the lottery, you are not likely to reach your goals unless you save. So as I said before, you need to save at least 10% of your net income, and that will go actually a long way. Here are different types of savings account. So you have a regular savings account. This account is your basic savings account. Many banks and credit unions don't charge fees for regular savings account. Then you have your club account. A club account is a type of a savings account you join to save money for special occasions such as holiday and vacation. So instead of borrowing, you're actually saving towards it. Then you have your certificate of deposit, which is called a CD. With this account, you earn higher interest rate than a regular savings account, but you'll have to make larger minimum deposit, generally between $1,000 and $5,000. Also open for a period of time. A money market account, this account earns a higher interest rate than a regular savings account, but you have to make a larger minimum deposit, averaging between $500 and $2,500. It also limits the amount of withdrawal each month. You also have your match savings account. This type of savings account keeps your money in the bank. Also, and the amount of money you put in your account will be matched by a set amount. Any questions?
No, ma'am.
Alrighty, tips for savings. Tips for savings, you will pay yourself first. I will continue to stress on that. You will pay 10% of your total earnings. You will also consider your needs and your wants, what you really need and what you really want. Pay your bills on time. Make sure that you are familiar with the due date. Make sure you're familiar when your loans and your credit card payments are due. Open a savings account with no ATM fees. Also save changes at the end of the day, such as putting it in a piggy bank and then you transfer it into your savings account. Bank surprises. Someone gives you a monetary gift, you want to go ahead and you save it. You're not gonna go ahead and spend it, you're gonna go ahead and save it because you know that's your goal to save. Don't go, also, don't go doing your hair or feet with that money. You want to go ahead and save it. Ladies, men, you don't want to go ahead and buy rims for your car and so forth. So you want to go ahead and save that money. Remember, you are in control of your financial destiny. Do we have any questions, Tanya?
No, but I have a question. Let's say those people, like some certain jobs, they allow you to have that income driven plan for your student loans. How does that work? How would that affect a client that comes in and wants to be pre-qualified with us?
Well, the bank will definitely calculate 1% of the student loan balance in your debt, even though it's deferred. So say, for instance, you have a balance of $2,000, the bank will put into consideration $200 for your payment, even though it's deferred because of COVID. So yes, that is that is actually going to be added into your debts.
So question, would you encourage me to go ahead and start paying on it, or should I wait till it comes out as a deferment to start paying on it?
I suggest that you still go ahead and make those payments if you can. If you're actually still employed and your income wasn't affected by COVID or any other natural disaster, you should actually still go ahead and make those payments monthly.
Okay. Anybody else have any other questions? You could either write them in the chat box, or you could unmute yourself and say your questions. Okay, since we don't have no more questions, I want to thank you guys for joining us today. The next webinar will be on June 14th. We'll be doing financial fitness, and then on June 21st, the keys to home ownership. Also, we have a job fair on St. Croix on June 22nd at the St. Croix Educational Complex from 10 a.m. to 2 p.m. It'll also be virtually via Facebook. And then on June 24th, we have one on St. Thomas at the Tutu Park Mall from 10 a.m. to 2 p.m. For the home buyers class, our next class is slated to start on September 8th. We're actually doing it virtually for both St. Thomas and St. Croix combined together. For more information, you can contact the VI Housing Finance Authority. We're located in St. Thomas at 3202 the Marara Plaza, St. Thomas. Telephone number 777-4432 or fax 775-7913. In St. Croix at the Fritz Luwartz Complex, Suite 200, Frederiksted. Telephone number 772-4432 or 772-4002 for the fax. Our staff for St. Thomas, we have Miss Risa Sasso. You can reach her via email at rsasso@vihfa.gov, or myself, Miss Tanya Industrias at tindustrias@vihfa.gov. On St. Croix, we have Mr. Rodney Paris. You can reach him at rparis@vihfa.gov, or Miss Sophia Farrelly at sfarrelly@vihfa.gov. Anything else anybody have to say? Any questions?
Thank you. And I'll see you guys next week on June 14th.
Yes.